Welcome back to Stocks Telegraph, where we bring you the latest news and insights on the stock market. In today's video, we're going to talk about the S&P 500 index and how you can invest in it. The S&P 500 index is a market index that measures the performance of the 500 largest publicly traded companies in the United States. It is a great indicator of the overall health of the US stock market, as it includes companies from various sectors and industries. The S&P 500 index is weighted by market capitalization, which means that the larger companies in the index have a greater impact on the index's performance. The index is rebalanced periodically to reflect changes in the market, and companies that no longer meet the criteria are replaced by new ones. So, why should you invest in the S&P 500 index? Well, the index has a long track record of delivering solid returns to investors over the long term. In fact, according to Standard & Poor's, the S&P 500 index has delivered an average annual return of 10% over the past 90 years. By investing in the S&P 500 index, you can gain exposure to the US stock market as a whole, without having to pick individual stocks. This can be a great option for investors who want to diversify their portfolio and reduce their risk. Now, let's talk about how you can invest in the S&P 500 index. There are several ways to do it, but the most common ones are through index funds and exchange-traded funds. Index funds are mutual funds that track the performance of a particular index, such as the S&P 500. They are designed to match the index's returns, and their fees are typically lower than actively managed funds. You can invest in index funds through a brokerage account or a retirement account, such as an IRA, or 401k. ETFs, on the other hand, are a type of index fund that are traded on an exchange like a stock. They are designed to track the performance of the index, and their fees are typically lower than mutual funds. You can buy and sell ETFs through a brokerage account, just like stocks. When it comes to choosing an index fund or an ETF, you should consider factors such as fees, tracking error, and liquidity. You can compare different funds and ETFs using online tools, such as Morningstar or Yahoo Finance. It's also important to keep in mind that investing in the S&P 500 index is not without risk. The stock market can be volatile, and the index can experience significant drops in value. However, history has shown that over the long term, the stock market tends to recover and deliver positive returns. So, in summary, investing in the S&P 500 index can be a great way to gain exposure to the US stock market, and diversify your portfolio. You can invest in the S&P 500 index through index funds or ETFs, which are low-cost and convenient investment options. However, it's important to do your research, and compare different funds and ETFs before making a decision. That's all for today's video. We hope you found this information helpful in your investing journey. If you have any questions or comments, please feel free to leave them in the comments section below. Don't forget to subscribe to our channel for more videos on stocks, investing, and the stock market. Thank you for watching, and we'll see you in the next video.